It's Thursday, October 9th. Let's level up. Bears chart again. We had an overnight high again and then a liquidation break. So those highs don't tend to be good highs. And we often do see backoffs, but ultimately they are repaired, and that has been the pattern. And of course, traders do what works until it doesn't. VIX tried to get over the 1724 to 1757 and again failed miserably, closed closer to the lows. Bulls do need to get it sustainably below 1623 here, though, for a recovery. If the bears can get it over the 1756, there's probably a run into the 19s up to the 200 MA, and then we'd see after that you're looking at something probably closer to the 22s. Remember, the 14s have been rock solid support, so we are kind of still in the lower part of the range. If you want to put on some protection for a year-end rally, makes sense to me. I do still think dips will get bought. I don't know that this little pullback is over, but I will say this, it's very late in the year, and I do think a lot of managers have underperformed, and there could be performance chase. I've told you before, October is the end of the year for hedge funds, and there's often some lock-in on some big names, and I think that's what we've been seeing, particularly with the money flow bleeding out of names like Google and Tesla. As far as the ES and the NQ go, I've told you before, I think that there's going to be still resistance at the 6,800 level, and as long as we're below there, the risk is chop with sideways to lower. Anything above it I think could run, but moves above have seen sellers so far, so we do need to see that change for new money longs. Bulls are sort of alright as long as they can keep it over to the 200 MA 30 minute. The Q is actually held right at the 200 MA 30 minute today, so as long as that holds on pullbacks, they're still fine. If that fails, we could see still lower, maybe 25,026 down to 24,975 half. On the upside, as long as they're over the 25,241 half to 25,275, it's fine. You could use that as a short-term stop as well. As far as SPY goes, new all-time high today. We did have a pullback. They're still well above the 667.34 all-time high, reference high before our new highs, and the 10 MA is now above it, and the 20 MA is playing catch-up. So far, pullbacks to the 20 MA, either to it or below it and then back above it, have been longs. That's currently 664.81 and rising. If we did the full Monty to the channel high, you're looking at 680s. If we did the full Monty to channel low, you're looking at a retest of the 658.82-ish area. As far as the Qs go, bit of a dubstep today. If you're long, I think you could use low of day at 607.48 as a stop. Anything above high of day at 611.61 is a long. Pullbacks are probably to 602.87 to 599.29, whatever the 20 MA is, and rising. So far, that has been the key support. If we do keep going, the channel high is up around 616.34. I have to tell you, even with the Apple pullback and that big blow up in race, which isn't really significant for markets, but it is sentiment-wise because it's a big stock for wealthy consumers, the breadth on the NYSE was only 2.25 to 1 negative on the end of the day, and the NASDAQ was actually positive, 1.09 to 1 positive. Ticks were distributive up until the very last minute in the ES. Same with the Qs, pretty much a distributive day with very few bodies over the zero line. As far as the aforementioned Apple goes, we're very close to the 260 all-time highs. There was some news today that Meta is going to be doing a deal with Luxottica to do more production of their smart glasses, and I think they're going to extend it across the Luxottica line. Obviously very good for Meta, not so good for Apple. I have equated the Vision Pro to the Power Glove. If you know, you know. That was the big Nintendo thing back in the 80s. It was supposed to be a big deal, and it wound up being a huge bust. And the Vision Pro actually, eerily enough, looks like the Power Glove. Google search, you'll see. As far as pullback levels go, 247.19 to 250 is the must hold. 20 MA is roughly around 250. If the bulls get it over 260.10, the retest of the all-time high and the yellow and green channel high would be 268.34. I don't view the pullback in Apple as being all that significant today, but something to pay attention to if it does have multi-days. As far as Google goes, money flow is almost burnt below the 20 line in the money flow index. Bulls there need to get it back up over the 20 MA for the Mobros at 247.45. The 9-2 spike high after the favorable ruling from their antitrust case, 229.75, so we could see a pullback to there. 50 MA is probably a buy the dip area. If we do get down to the 229s, you want to do some kind of short put sale. I like doing something at or below 211s, which of course was the 9-2 gap fill. Still think Google is doing well, so one to buy the dip in, I think. Tesla is bleeding out a little bit money flow wise. I think just some profit taking ahead of the earnings, which are on 10/22. The big fear here, of course, is going to be guidance. We did have that big pull forward on the tax credits. I told you I got one myself. I think the new models that they just came out with, the cheaper dumbed down Model Y and the Model 3, probably suck in some new people. If anything, I think that they're almost decoys to get people to boost up, because for $5,000 more in the Model Y, you can get a significantly better car as long as you're okay with the rear wheel drive. Tesla, as far as it holds, the 20MA, 435.54 down to 429.84, which is a 78.6 is fine. If that doesn't hold, the gap fill from 912 is 395.94, and I see more significant support between 367.71 to 383.76, which is of course the prior breakout in the 61.8 area. That whole level to level and fib to fib thing. I am impressed with the new FSD. I haven't been able to get it just yet. I've been very curious to try it, but I think that that new Optimus is going to actually be a big thing. They're training it on the same protocol as their FSD, so I think that that's going to be a thing. Probably not huge in the beginning, but I think it will be able to do some menial tasks and probably take some lower end workers out of the workforce. Remember, these things just need maintenance. They don't need 6 days. They don't need maternity leave. They don't need 401ks. They don't need vacation. They just do their jobs. I've told you before, I think advanced automation and AI is going to be very problematic for the jobs force coming in the future. I've talked about this now for 10 years, and it is now arrived. NVIDIA is still doing well. New deals all the time, new all-time high today. Bit of a topping tail at the 195.30. I think it got caught up in the market selling off a little bit. Anything over 191.05 is still better. Anything over 193 is better still. And of course, over 195.30 puts the 200 and the 204.87 two times range in play. 2.618 is about 217.48. I do ultimately think we can get there. If you're doing it, I'd be a little bit careful here and wait for dips. Pullbacks to the 183s to 184s are still okay, but that area really does need to hold. I still think that NVIDIA probably continues to pump into the end of the year because it's very difficult for clients to say that they don't have AI exposure, and NVIDIA, of course, is the big Mac daddy of the space. Bitcoin still kind of choppy, but not quite giving it up, but not quite rallying. Anything over 121,474 is still fine. Bulls do, however, need to get it over 123,615 to 125,200, particularly that 125,200 to negate the look above and fail. And if the look above and fail fails, we could be in for some kind of a serious ramp all the way up to the channel high, which could be as close to 140,000 by the time it gets there. Generally, all the gains in Bitcoin happen in just a few days, and you kind of have to be in it to catch it. Gold, bit of a reversal day today. I am uncertain yet if this is going to be significant, but what it was a pretty big body candle. 10MA is down at 359.15, which is just below our 2.618 fib extension of 359.46. If that fails, the 20MA is at 349.84. I've told you I don't mind doing some kind of 1:2 put ratio or 1:1:1, playing for a test back to the top side of the old green channel, which is currently around the 335s. By the time it got there, it'd probably be closer to the 336s to even 340s. Generally speaking, markets are still up near highs. We have all-time highs in an overnight session, which are highly unlikely to stand as, quote, good highs. We could see a liquidation break. The liquidation break could even be quite large, but I do ultimately think that gets repaired by the end of the year. And I do think if we do get a dip here, it could be a seasonal opportunity for a buy the dip for that end of year rally. Like and follow for more.